But what you can change is how you handle your own portfolio. So I highly recommend, I tell everybody I talk to, if you are selling options, close it at 50 to 75% of max profit. This is the How to Trade Stocks Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Uhl. Hey there, traders. Welcome back to today's How to Trade Stocks Options podcast. Today, we have a special lesson for you. I'm putting it here on the podcast because I really believe that this is going to provide you massive value, and that's what I'm trying to do here. And hey, listen, if this podcast was useful to you at all, I really highly suggest that you go check out the full trading course at AIStockTradingSystem.com. That's AIStockTradingSystem.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. Hey there, traders. Welcome back to today's How to Trade Stocks Options podcast. Today, we're going through options trading mistake number 6, and this is waiting too long to buy back your shorted options. Now, that's a lot to say, but here's what you need to know. Shorting an option means you're selling the option. And basically, he's saying, or what we're going to get into here is waiting too long after you've sold it to buy back and close a position. It can be confusing to new investors about selling options. You know, you don't actually own the stock, so how can you sell an option, whatever. But the point is initiating your trade and then waiting too long to close the trade. At the end of the day, that's the story here. So this is part of our options trading mistake series, number 6, waiting too long to buy back your shorted options. And this goes with the Ally Invest options trading mistakes. And I wanted to put my own spin on their videos here and give you a real trader's perspective on what they're talking about. So let's get into it here.
Option traders make is waiting too long to buy back option contracts that they have sold. For example, let's say we sold an option contract for $1. Do we really need to eke out that last 5 or 10 cents to try to get the maximum amount that we could from selling that option contract? A lot of times you just want to be willing to buy back and remove that obligation just to free up capital, to also not have to worry about the movement of the underlying.
All right, so let's talk about this real quick. So he's got a great point. If you've sold it for $1 and it's only got 5 or 10 cents left in it, you might as well close it. We had a discussion with Chris Butler, and I really highly recommend you go check out his video he made about a trader who had a Tesla trade that thought it was going to expire out of the money, and then it went into the money after hours on Friday, and it totally blew up his account. Huge unintended consequences for following his plan. His plan was to let it expire, take the entirety of the credit, and be done with it. But it worked against him because he didn't close the trade ahead of time. His put that he sold was in the money, and the put that he bought was out of the money. So it expired in between, and so he owed the difference, and it was a huge blow up. Shouldn't have happened. Really, honestly, it shouldn't have happened. The broker shouldn't have let that happen, honestly, in my opinion. If the market's closed, it should be closed. It shouldn't be an after hours thing. But can't change that. But what you can change is how you handle your own portfolio. So I highly recommend, I tell everybody I talk to, if you are selling options, close it at 50 to 75% of max profit. Let's say you're selling it for $1. That means you're taking $100 of credit in, and you're going to close it when you've reached $50 or $75 of profit. End of story. And also, like you talked about here about capital, if you're selling, let's say it's a $5 wide spread, you've sold it for $1. That's really one of the things that I like to do. Sell $5 wide spreads around $1 or so. If the stock only, or if the spread only has 5 to 10 cents of available value left, you're still basically holding up $400 of capital for, let's call it $5 of profit, when you could just close the trade, right? The $5 is meaningless when you could take that $400 of capital per spread and put it onto new trades. So that's what he's talking about here, is that, you know, you've already got the bulk of the profit. The last 1 or 2 percentage points, you could, in theory, just move on and make more money on your next trade instead of waiting for that 1 or 2 extra percentage points, or even less.
Stock. So how can we trade smarter? If I'm
Trade faster,
looking
trade smarter.
at buying to close an option contract that I'm sold, I always like to look at if I can keep 80% of the cash received when
So basically, he's taking my 50 to 70% rule just a little bit further to 80%. I have no problem with that. The only issue is that the longer you stay in one of these trades, the longer chance that something could go against you. And if you're waiting to go from 50 to 80%, that may be 1 or 2 days. It may be another 1 or 2 weeks. So, a conservative play would be a little bit shorter, but still, he's got the right mindset here.
I sold that option contract, or another way to say it, of the premium or the price of the option contract. So if I sold an option contract for $1 and I see it trading for 20 cents, well, I've gotten most of it out of the option. I've gotten most of that premium. Why do I want to stick around all the way to the end, and who knows what might happen? As a matter of fact, if I really want to stay in that contract, I should maybe buy it back and go out a little farther in time and get a little bit more time premium. Well,
yeah, basically, if you really want to continue that position, there's no reason why you can't just roll it from this period to the next period. And whenever I'm selling spreads, right, this is what I teach in the AI stock trading system course, is basically if the stock is moving up, you want to be following behind it on those back-tested trend lines. You have empirical mathematical evidence of where a support level would be. Now, as it moves up, you can roll it from strike to strike to strike. But I would go into a further out period. And as long as it continues up and you can continue to pull along that back-tested trend line, then you could, in theory, roll it out forever and just collect it week after week after week. And that's what he's saying here is that, there's no reason to keep it on for the last 10 or 20 cents because you, in theory, love the trade. Just roll out to the next week and then you can make potentially even more and not have to worry so much about the trade working against you. So that's options trading mistake number 6, waiting too long to buy back options that you have sold. I agree with this one. I would play it a little bit more conservative than they do. Like I said, 50 to 75%. They're saying 80%, but still the theory is you're closing the trade. You're not going to try and eke out every single penny because you are a smart trader and you're looking to find the best opportunities out there. And if you're only going to make 10 cents, where you could be making another $1 on another trade, my money would be going to the next $1 instead of keeping the 10 cents here. So listen, I hope you found that helpful. Make sure you like, subscribe, and enable notifications. That way you never miss any of the tools, tips, and tricks I upload every single week to help you trade faster and trade smarter. And I'll see you on the next episode. Okay, so what'd you think? That was pretty incredible, right? Now, if you liked that, that's only a taste, only a sample of what you're going to find in the full AI stock trading system. And I really highly encourage you to go and check this out. Obviously, you are interested in learning on how to trade, and that's why you're listening to this podcast. Now, I'm going to take and download my entire trading system that I use day in and day out onto you. And the only way I'm going to be able to do that is over at the AIStockTradingSystem.com. You're going to get phase 1, 2, and 3, several bonuses, and on top of that, I'm going to walk you through over a dozen trades that I put on inside of my account, holding your hand and showing you exactly how I got in, how I got out, how I use the artificial intelligence data, and how this could work inside of your own trading portfolio on a daily basis. So make sure you head on over to AIStockTradingSystem.com. That's AIStockTradingSystem.com to learn more and to get started and to download my decade plus worth of trading experience into your hands so you can start using the AI stock trading system today, the 5-step system to take the guesswork out of trading. Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.